Hello and welcome to the Crypto Club and Digital Asset Weekly Catch-Up on Zoom. It is Sunday the 1st of December 2024 and this week we're going to be talking about whatever we end up talking about. Those who've watched some of these episodes previously realise that these sessions are driven by the audience, so typically we may talk about blockchain, DeFi, cryptocurrencies, ICOs, STOs, TGEs, any other three-letter acronym really. Sometimes we talk about central bank digital currencies, crypto regulation, crypto wallets, all sorts of things really. So hopefully you'll find something of interest in this session. We hold these every week, so if you'd like to come along to a future event, do please come and join us. Details in the link below, 7 p.m. till 8 p.m. UK time every Sunday. So with that, let's see who's going to come and join us today. Hey, Gabriella.
Hello, everyone. Hello, Gary.
Good evening to you. Welcome back. And Ken as well. Hello, Ken.
Hi.
Good. Thank you. Good to see you both back again. My regulars this week.
Yeah.
It's been fascinating over the last few weeks, actually, on these sessions because we've been covering so many different areas. Each week's been very, very different. So I think, Gabriella, you might correct me, but I think one week we talked about international regulation. Another was about the metaverse and various interactions. Trying to think what else we've been talking about. There's been so many different things lately. But always interesting stuff. And we a few weeks ago we went down the rabbit hole as well of crypto in general and fiat currencies, and that's always an interesting area. So see what comes up this week. So Gabriella, any topics for discussion this week of interest to you? Or you just here to listen as always?
Yes, okay. I have a few questions.
Okay.
Yes, about crypto versus Bitcoin regulation.
Okay.
Because
See what we can do. Okay.
if I am correct, are not the same.
They are generally the same. So Bitcoin is a cryptocurrency. So we think, and this is where the regulations may differ slightly from country to country. And I'm trying to remember this generally off the top of my head. Most countries tend to think of crypto regulation in typically three ways. One is as a cryptocurrency. So it might be used effectively as e-money, so electronic money. So Bitcoin would fall within that because it's something that you use to make payments. Then you've got crypto tokens, which is where you tokenize potentially an asset in some way. And then I've forgotten what the third one is. I'll go and check in a minute. But ultimately, Bitcoin is a cryptocurrency. And so any regulation around cryptocurrency
so Bitcoin is a cryptocurrency, is not an asset, and is regulated under this.
So whether it's an asset may vary from country to country because some countries will consider it to be an asset for taxation purposes, and some may consider it to be a money. And the difference between money and an asset is that you don't pay tax on using money. Okay, so if I pay a bill in euros, I don't additionally pay a tax for having spent some euros. Whereas with Bitcoin in the UK, for example, if I was to buy something using Bitcoin, then I would have to keep a note of what price I bought that Bitcoin at and what price it was at when I used it to pay for something. So it's treated as a crypto asset in that respect.
So could say as well that Bitcoin is often traded as a commodity.
Yeah, because you pay taxes on capital gains on commodities. Yeah.
The regulation are not the same that the cryptos. So differ when it comes to Bitcoin based versus other altcoins or tokens, especially in terms of security laws and anti-money laundering measures.
So this is where it all kind of differs all over the place. So as an example, in the UK, there's a piece of legislation that came in recently, which is the Economic Crime and Corporate Transparency Act, cryptoassets. There we go. And that includes some key definitions. So it's got a definition of a crypto asset, which is a cryptographically secure digital representation. So that's a cryptocurrency, potentially, or it could be some sort of tokenized thing. You've got NFTs. It recognizes NFTs as different to a crypto asset. It's got stable coins. It's got privacy coins. So they've come up with a set of different definitions here. And this is where you still get a problem sometimes that a financial services regulator may define things in one way. A tax authority may define them in a different way. So if I try and find in a minute the HMRC definitions of crypto, they may be slightly different. So they vary, I'm afraid. Does that help at all? It still gets very confusing.
No. Okay, sorry.
So I'm just going to say, just to add to that, when it comes to regulation in the US, they do have a slight split where the CFTC, the commodities regulator, regulates Bitcoin, and everything else is regulated at the moment by the securities regulator, Gary Gensler. So they've pushed
that's not quite true in itself, though, is it? That's why Ripple were having a pushback about some of that a while ago.
Well, no, Ripple's issue was to do with their ICO, because they're being sued because, well, the regulator says they did an unregulated investment raise. So that's it. But at the moment, in the US, Bitcoin has been recognized as a commodity and is basically under the supervision of the CFTC.
Exactly.
Everything else is under regulation of the Securities and Exchange Commission. So that's the only market I know where they've actually split. But like Gary was showing with the UK, I wouldn't even know where to start.
So it does vary, and I know a while ago the Swiss did a good document around crypto asset definitions, and then in Europe there's a thing called ESMA, which is the European Security and Markets Authority, I think it's called, and they've done some definitions as well. So kind of interesting. And you know, in Europe there's there's Regulation EU 2023. Let me just share this. This shows you how it is that I get to look at some really interesting things at times. So there's this regulation which is across the whole of Europe. Regulation, this was done earlier on last year, and I think that there are some definitions here. There you go, crypto assets, it's got some definition in there. It says some crypto assets qualify as financial instruments, which means that they're not money. They are like, as Ken was suggesting with the SEC, they might be considered as securities. They've got other things here. They've got things that have to fall within anti-money laundering. So there's a whole range of definitions. So it does vary from country to country, in effect, Gabrielle, I'm afraid.
Yeah, and the importance of that as well is to do with tax. It varies from country to country on whether you're going to pay your tax as a asset, in other words, capital gains, or whether you pay as just an earnings. It's a very complicated field at the moment.
Yes, but for example, the taxation of the Bitcoin is often taxed as a property or a commodity, meaning that the capital gain taxes apply when it's bought or sold. That's correct?
In Europe, that's correct. Yeah.
Just in Europe, it's not the same in the US?
Not necessarily. This is where it can get confusing, and you really need a regulatory lawyer to provide certainty on this. So in Europe, you've got MiCA, which is what the European directive I kind of showed before, the 2023, and that's got these three definitions of an asset reference token. So that's what you would consider to be a cryptocurrency. You've got what's known as electronic money token. So that's a type of crypto asset. but it's kind of like electronic money. So you wouldn't tax that in the same way you would tax any other asset. So this is where it does come down to there are regulators in the US. I would still argue. Cam was saying it's either a security under the SEC or it's a commodity under the CFTC. I seem to remember in the US there are still about 13 different regulators,
Yeah,
each of whom are staking a claim in this, and
yeah,
that's forgetting state level stuff as well.
yeah. The big push on a lot of the people who are supporting Trump is because there's been that clear definition now that CFTC regulates Bitcoin.
Mm-hmm.
But what they want to do is they want to move a few of the bigger cryptocurrencies from the securities division onto CFTC because they believe that CFTC will give them a more favorable, will create a more favorable environment. So that's really is the big push that's going to be coming from the crypto community within the US. And they've already started talking about it a lot. So we'll see what Trump does. But also the other thing they're pushing for is for when Gary Gensler leaves. I mean, because Trump can't fire him because it's the way that
Mm-hmm.
it's appointed. But obviously, because of pressure, he might resign. So, and even if they can't fire him, I think he's only got another year left on his
Well,
term.
he's actually announced he's leaving on January 25th, I think.
Oh,
In
well,
fact,
so he's going already.
yeah, in fact, we've just been joined by Jason, and Jason, I think, is probably going to know the full details on all of this. So, Jason, thanks for joining us. Can you hear us? Okay. Oh, come on, Jason, don't be camera shy. Hey, good man.
I can hear you. How you doing?
We're good. We have just started talking about the regulation of crypto assets and cryptocurrencies. And unsurprisingly, SEC, CFTC are featuring, so the US regulators. And we were just beginning to talk about Gary Gensler, and I believe he's announced he's leaving on the 25th of January, I think it is.
The
And
20th.
the 20th. There you go. Jason is absolutely on the pulse as always with this kind of thing. So, yeah, so we're just beginning to talk about the regulatory differences around the world around whether cryptocurrencies are treated as electronic money, digital assets, or whatever. So you timed it nicely to join the party there. But more importantly, Jason, it's probably worth your while. Would you mind just sharing a little bit of details about who you are, where you are, what you get up to? You've got quite an interesting story.
I had a fight with an American regulator over in accounting, which ended in 2014. It ended my banking career. I was debanked, if you will. And I was so angry, I created a protocol called Pacioli.ai, which just hit mainnet last week after a long time in development. It's the world's first RegFi protocol, right? And it you can create and use structured disclosure infrastructure, if that means anything. And if it doesn't, there's 20 million XBRL disclosures filed across 200 regulatory agencies in 65 jurisdictions every year. And it's we're moving it all on chain. So that's what we do. When you file financial statements with Companies House, you don't know it, but they're tagged in XBRL because a service provider does it, right? Yep. You don't care either. It was first rolled out at the FDIC in 2007, and then the SEC adopted it between 2009 and 2011. It was rolled out for public-facing financial disclosure. And it's horrible. You can't rely on them. So we built a model that you can rely on and an ecosystem of stakeholders that are aligned with incentives that provide proof of compliance, right? Proof that your balance sheet balances, because they don't balance at the SEC, right? So that's who I am and what I do.
Cool. Thanks, Jason. So for anyone who's watching, who's hearing all those various letters and that, what many people don't realize is that most files these days, whether it's a Word document, an Excel spreadsheet, PDF, whatever, it is actually constructed in a markup language called XML. So that's extensible markup language. That was
XML is the semantic layer.
Yep.
XBRL is the specific syntax for accounting information, reporting information.
Yeah. And what we now have is standards around the world where companies, when they submit accounts, they have to be in XBRL format. Is that right now, Jason?
That's right.
Yep. Yeah. Yep. Well, which means at least they're consistent in the structure, not necessarily consistent in the content. And I guess, Jason, with you saying you've kind of like the level you've got on it, does that improve the quality of the content?
No.
Okay.
It makes things worse in some cases, right? So what regulators did on Thanksgiving Day is they took a beautiful 25-pound turkey, they chopped off the head, they discarded the rest of the turkey, and they fed everyone the neck and the head. That's what they did. We actually include the whole turkey.
And did you
makes any sense to you?
What I find more interesting is you're talking about putting it all on chain. So does that mean that things like company reports and that will be accessible on chain?
They'll be accessible. Okay, on chain is a subjective term.
Mm-hmm.
When I say on chain, I mean referenced on chain, right?
So you using a blockchain as kind of a catalog to off-chain things.
That's correct.
Cool.
And also, a blockchain is used as a decentralized physical infrastructure to provide proof that a financial statement is accurate, compliant, and structurally sound. Right? You can file anything with the SEC. You can file a chicken. And if it makes it through the Edgar database, then you're fine.
Okay. So they don't do any data validation.
Structure is, right?
Okay. So they don't do any data validation of any sort.
No,
okay.
The vendors do it. And the vendors only meet regulatory specifications, which are horrible. Horrible. So
you given the URL a minute ago that people can check this out. What was it again? The web address?
Sorry. Did I give you an intro? I don't remember giving you a web address.
I thought you gave a URL or something that of the firm. No, okay, no problem. I was going to pull it up for people to see. That was all.
I mean, you can go to pacioli.ai.
That'll be what was that was what I was thinking of. How'd you spell that, Jason? For those who,
I'll send it in here if I can.
Sure.
Chat. Is that right?
Yeah. You can do it through the chat.
Okay.
And then I'll pull it up on screen as well if that's accessible. We like to be visual at times. That's always good.
Right. There's that.
Okay, we got that.
So the EU, as you know, passed the markets and crypto assets regulation, MiCA.
Mm-hmm. Yep.
And that now requires all white papers to be in machine readable form using the inline XBRL, right? We were the first to ever publish a MiCA compliant machine readable white paper.
Okay.
Right. So in order to kill off the old cottage consulting industry that is structured data reporting, we're giving everyone their first report for free. And if you buy a subscription, it comes with a validating node. So you'll recover the cost of your subscription probably within a 6-month period of time, and then you'll make money. And the way you make money is by hunting on the network for requests to validate.
So other people become validators then?
When you buy a subscription, a license, you become a validator. There's 2,200. There's a limited number of 2,200 licenses.
Nice.
And those 2,200 licensees, you know, like every blockchain, they're going to be there's a difference between promoting a token and building the growth of a network. Those 2,200 licensees will be the ones that gain the most advantage there. That was a better way to say it.
Okay. Very nice. And you say you're now live with this.
We deployed to mainnet, yes.
Okay.
Yep. The first financial statement was validated on a blockchain on, I'll tell you, November 26th at 11:34 a.m. and 3 seconds.
Okay. So there we go. We've got all of that. So that's something for people to check into. That's really good. So you effectively just did a 3-minute pitch there on the project without having the 3 minutes. So I like that. Thank you for that.
It took 7 years to compress it down to less than 3 minutes.
Okay.
Because it's really complex. For crypto degens, you buy a node, you get paid, period. That's it. Want to get paid? Buy a node.
Cool. Okay. Gabriella, does that in some way answer your questions from before about crypto regulation then? Does that make it a little bit clearer?
Yes. Thank you.
The standard answer with many of these things is that it's never simple, it's never clear, it's never easy. And it's certainly never consistent across countries as well.
Yeah.
There's always variations. But Jason, the XBRL standard, at least for statutory reporting, that is an international standard, isn't it?
Yes, it is.
Yeah.
It's a standard it's a mandate across, it's a mandate at 200 regulatory agencies across 65 jurisdictions.
Yeah.
Companies House and HMRC in the UK, right? Japan, Malaysia, India, the United States, Canada, Brazil, Russia, China, all of the EU territories. I say Japan, Malaysia. The newest adopter is South Korea. For each of the COSPI, members of the COSPI index are now required to file machine readable accounts.
What's COSPI, sorry?
The index on the South Korean stock exchange, the KOSPI.
Okay.
You know how you have the FTSE? They've got the KOSPI.
Okay.
KOSPI.
I'm with you. Okay.
Yeah. We've got the DJIA, Dow Jones Industrial Average.
Very nice. Okay. Ken, any thoughts or comments on any of that? We good?
Yeah, it's pretty interesting. Only thing I'm thinking of is so you get the reference data, but is the underlying accounts, I mean, are they just, the same as those that are being published now that aren't that good? Or is there some form of difference in terms of the validating of the accounts?
Well, we started with the reporting, which is the last mile. And as we grow, we'll partner with others so that finally you get point of sale, e-commerce, bill of ladings, where all the business events occur, contracts. It will interrogate all the way back. We don't call it audit, but that's what it'll become, right? So instead of a single auditor, right, who signs an engagement agreement in wet ink, gives you a set of wiring instructions or a mailing address to send a check, you'll engage with factory engagement contracts on chain that identify all the actors, members, we call them, and interrogate all the way back to the edge of an enterprise's business event life cycle.
So does that mean ultimately you could go into like a company's profit and loss statement and drill through to the transactions behind that P&L?
We don't do that yet, but that's where it's going. Yes.
Okay. That's pretty powerful to be able to do that.
Well, the big four accounting firms don't want that because they want to spend a lot of time on an audit. They make 160 billion a year and they keep about 30 billion, and they feed consulting and advisory the other 400 billion, which is where they make their money.
Yeah.
They need to go. And if you haven't noticed, in June of 22, the government of the UK announced the dissolution of the FRC, Financial Reporting Council.
Mm-hmm.
Well, nothing ever got dissolved. See, humans don't want to believe this, but corporations own and operate every level of government. And I'm sure there's somebody on this call that will deny that. But to the extent that you deny it is the extent that what you're about to see in the next 4 years in the United States is a trust busting process. I use the term trust busting the way Franklin Delano Roosevelt used it when the Sherman Antitrust Act was first adopted to break up Standard Oil, who was the first trust to get busted.
And that then led to the breakup of all the oil companies and the Chevrons and Amacos and all things, which had different names, but miraculously still used to meet each other. If I remember was that the story in Jekyll Island? If I remember correctly.
Well, no, that's the the formation of the Federal Reserve.
Was that not connected in some way?
Well, it was all connected. I mean, those were pretty much representatives of the same people that bound all those monopolies.
Mm-hmm.
So what we're banking on is that Donald Trump and Elon Musk and Vivek, they have more money than they're not in this for the money.
Mm.
And if they're in this for the money, then there is no hope for humanity. None, zero. We should control alt delete right now. So the bet is that they're not doing this for the money. They really, really do. They want to, and it ain't going to just be America, because what we're going to show the world is that citizens can rise up like you people in the UK as you're boiling slowly in a pot of water until death. That government needs to go. And there may be only one way to do it, and it may not be through democratic means. But it's gonna cause a movement to shrink governments around the world. They're there to serve people, not the other way around.
Yeah, we certainly for anyone who's familiar with the term boiling a frog, there's certainly a sensation of that in some areas at the moment. Interesting.
And British people say all the time, I'm in Fight Club, as you know, Gary, all the time. Mm-hmm. And I argue with people who justify how it's okay, we can live with it. I don't understand. When are you going to not live with it? As the water is pouring down your lungs? Is that when you say, uncle? When is it?
It's usually when you've not had a meal on the table for, I think it's 2 days or 3 days. I think that's when you start getting civil unrest, shall we describe it as? Yeah, which is why governments don't necessarily worry about things like money and that kind of thing. They worry about supply chains, because when the stores are empty, that's when people get upset. And we saw that happen a couple of years ago in the UK when there was a big supply chain disruption. And I used to work in supply chain of the retail industry, so working with shops and that kind of thing. So I know just how good the order fulfillment and supply systems are of retailers. And I had a cold chill down my spine when I saw certain big retailers having empty shelves for several days, because that's the stuff of non-Western companies, should we say, and it felt uncomfortable. And that's where, if the stores are empty for a few days, that's where you start getting pushback. So we'll see where that goes.
Well, they're muting people and censoring people, as you know, because they're arresting you if you say something bad on social media.
The reality is, there have been elements of that have always happened. The only thing that has changed is that we're becoming aware of it. And this is kind of interesting. One of the conversations I had with someone recently who said, "Oh, everything's changed." I said, No. Nothing has changed except that you're now aware of some of these things. But yeah, we'll see. Anyway, so just been
further justification of the status quo.
Yeah.
Okay. All right.
Yeah. Lethargy is an incredibly powerful thing, and governments rely on it. That and taking the point of least pain resistance, I think.
It's not the British I know.
We got upset after we lost a fight over some tea a couple of 100 years ago. Never been quite the same since. Well, that's the reality. So how's it going otherwise then, Jason? Is it that you've been preparing for the launch of this and get everything onto mainnet?
Yeah. I mean, it's just starting now, right? You deploy to mainnet, you can't go back.
Yeah. The obvious question is, which mainnet?
Polygon is where we start.
Okay.
And we'll deploy to other EVMs. Base is probably next, because that's easy. It's just another chain, right? Different RPC code.
Yeah.
And we're exploring Solana, because that's where the money is, right? So, yeah.
Talking about that, I'm just looking at your token supply allocation. Has your ICO or token distribution already happened?
There is a token, and it barely trades on one DEX and one Bitmart. There's about 61 million in circulation, but we sucked 3 million out of circulation when we hit mainnet because of staking requirements and all that.
60, so you've got about 20-30% of total supply out at the moment.
Right.
Is that because you have to lock that up as part of deal with the exchange in some way then?
It's not a deal with the exchange. It's the deal we made. When we architected the protocol, it was when you buy a license, you've got to stake 7,000 tokens come with a license, and you've got to go get the other 7,000. So you need 14,000 for each node that you run. Right?
And is that what you're saying before you can have up to 2,000 of those, or am I getting that confused with nodes?
2,200. There's a limited number of 2,200 initial licenses,
Yeah.
which come with a validating node. We don't want to sell nodes and tokens to degens. We want to sell enterprise structured disclosure architecture and infrastructure to users, right? The node comes as a bonus, which accelerates the cost recovery of the license. Once you've recovered the cost, then you're making money. Who does that? Regulators and lawyers.
So who's the target audience to buy those? Sorry, I mean to buy the nodes and the validation. I didn't mean to buy the regulators, just in case anyone is getting confused with what I said.
You mean the licenses?
Yes.
So our target market are reporting entities, which can be crypto projects that are either seeking admission to trading in Europe or issuing a token for the first time, or both. And in the UAE, because you also need machine readable white papers in the UAE now under the VARA framework in Dubai. So it's companies, accountants, and lawyers. To a lesser extent, plain old investors, although they're not going to use the license for originating financial reports the way a project or a company would, right? And then we have all the infrastructure necessary to sell to governments who want to pare down an operating budget of, say, $2.5 billion a year, which is what the SEC usually asks for every year, and create the beginnings of a decentralized regulatory agency, like a DAO almost, because of the precision that our software features when articulating your accounts, if you will. There isn't the need for a staff to prosecute back and forth, especially when you file registration statements to register securities for the first time, which includes 2 years worth of financial statements. Because you can't make a mistake inside of the Luca Suite component of Pacioli.ai. Because there are guardrails that prevent you from doing that. So whatever comes out of Pacioli is already perfect. The external validation, like I said, is the beginnings of what assurance may look, feel, and function like in the future.
Go on, Ken.
I was just going to ask, tokens called audit chain, is that correct? AUDT.
That's right.
So it's trading on CoinGecko at about 3 cents or 3.37. So it's based around $250 or $259 to get a because you're saying the other 7,000 AUDT would come with a license if you become a staker.
If you buy a license, you get 7,000 tokens. You have to go out and get the other 7,000 if you don't have them already.
Okay, so it costs around basically around anywhere between $250 to $300 to get a license.
Extra. No, the license is right now we're in phase 2. So a license is $2,200 US.
2,200.
Right. And you have to go out and get the other 7,000 tokens, which 7 times 4, $280, whatever it is.
Yeah.
Right.
And how many licenses are there in total?
2,200.
2,200. Okay.
Right. We're in phase 2 at the moment. But we haven't done any marketing either.
Oh, okay.
And any marketing that is done is usually me screaming and yelling.
Okay. You can see phase 1's sold out. Okay.
And Jason is particularly good at using capital letters as well. But I think that's just when he's getting upset.
Well, in a lot of the documentation, there's capital letters, but they're also bold and in
Okay.
red. In red, right?
So that's really angry. Yeah.
It's not
I,
angry. It's more of a warning, right?
yeah.
Because people don't listen. So if I'm ever in court and I'm handed the document I know is coming because it's Exhibit 1 in defense, right? He hands the document. Can you read the first paragraph in all bold red font letters, please, to the jury? Gladly, right? You are a goddamn idiot if you purchase one single token, right? It's reserved only for those that can lose, can afford to lose, and who have no need for liquidity and yada, yada, yada. All that stuff. I mean, it's
So
part of life in the banking where I come from. That's part of life. Nobody reads it anyway, right? To the extent that you're afraid to disclose something should be the multiple extent to which it gets disclosed, right?
and Jason is always true to his word. I've just pulled up the white paper here, and absolutely, as it opens, first paragraph, capital, bold, bright red. Love it, absolutely. Jason, I'm going to ask a way more general question about it for a moment. What's the background to the name of it, Pacioli? Where does that come from?
So Luca Pacioli lived in the 15th century. His peers were Leonardo da Vinci, which he collaborated with, and they were both incubated by the Medici of Tuscany, which, as you know, or may know, purchased and installed 4 popes. That family, the Medici family. And it was the Medici family that was pitched by Luca, who reorganized the books of the Medici, the bank, right? Monte di Pia. What was the name of that bank? Monte dei Paschi di Siena, the first bank on the planet. Right. So the Medici sent Luca Pacioli out to all the Venetian merchants to explain this new double entry bookkeeping method. And they sent a legionnaire out with him also, a guy twice his size, who didn't say a word. Because Luca would knock on the door, they'd say, hello, we want you to use this double entry accounting method because it'll reconcile your books with ours, right? Because we have a hard time either getting paid on time or people have a problem paying on time and the books never reconcile. And we want to eliminate this problem. He'd look up at the Legionnaire would look down at Luca, and they would both look at the Venetian merchant. And that's how the double entry bookkeeping method was actually adopted. But Luca Pacioli was the first to document it.
So that's where the double entry bookkeeping comes from.
That's correct. Luca Pacioli was the first to document double entry bookkeeping.
Wow. There you go. I learned something today. I was familiar with the Medici family and their background in terms of the banking system in the 13th, 14th century or whatever. I didn't know that's where double entry bookkeeping came from.
Mm-hmm.
I love these sessions. I always learn something new. Cool.
Bravo.
So where do we go from here then? That was a really interesting type thing. Conscious, we've actually spent about 30 minutes chatting about that. Anything else going on in the world or anything you'd like to share, Jason?
Well, the United States is now the crypto capital of the world.
From January the 6th.
What's that?
From January the 6th.
Well, no, that was when, that's January the 20th, right?
Okay.
Yeah. Of 25, which is when the president is inaugurating and his administration takes over. Right now, there is no president. I'm not sure. I don't know if Biden is even alive. Who knows if he's alive, right? And if he is alive, he's sleeping all the time. So there's nobody really running the country.
It does seem that there's an absence of evidence of decision making, shall we say, is possibly one way of diplomatically describing it. So yeah, I guess everyone's gone into stasis as they wait for the inauguration.
Yeah.
And then it's got,
including the SEC.
Mm-hmm.
Right.
Yeah.
Well, just we're talking about Gary having obviously decided he wanted to leave. But there's also rumors that they want to get the or there's a lot of people pushing for the ex chair of the FTC to take over. If do you know anything about that?
The Federal Trade Commission?
Mm-hmm.
Yeah.
Well, there's a lot of talk about a lot of people who would be appropriate for the job, but we're not going to know until after January 20th.
Yeah, but it was interesting when the Gensel announcement came out and everyone was saying, "Oh, someone's hacked his Twitter account." Because curiously, he actually announced the resignation on Twitter or on X rather, but it did actually have the link to the SEC page, which we got here, where it was actually announcing his departure.
Yeah, but there's another Gary Gensler Twitter account that retweeted Gary's tweet and said, "I'm not leaving. Don't listen to anything this Twitter account says."
Yep.
Which caused a little controversy. I don't know how much, but
yeah.
Good.
Well, it's fascinating, isn't it? Because usually you get Twitter accounts or X accounts that are set up to convey misinformation, but on this occasion it was the real deal, and then someone set up another account to convey misinformation about the real information, which shows
Actually,
why
that Gary Gensler Twitter account, not his, but the other one, has been around for a while, actually.
Mm-hmm.
Yeah. But yeah, I agree. Twitter accounts are set up specifically to either spread information that is distorted or to spread disinformation,
mm-hmm.
to divert you from the truth and psyop you, right?
But this is where you get the whole thing of, what is it, misinformation, disinformation, and malinformation. And malinformation is the one which I think is going to grow and grow over the next couple of years. So let's see what happens with that. Yep. Interesting times, definitely. So we'll wait with interest when we wake up on the 21st of January, 2025, and there may be a whole new regulatory world in place. Cool. So does anyone have anything else, or should we wrap up for the day?
Well, not really. Except,
Okay.
the crypto markets have basically hit another all-time high.
Yeah, I was taking a look at Bitcoin the other day, and it seems to be going through that kind of like psychological will it, won't it, around the 100K mark. And it keeps kind of teasing and not quite getting there. So you're right on that. We take a look where I think last week it was hitting, what's that, 98 or so.
Yeah, I saw it at 99 during the week, and I thought it was gonna go and hit the 100, but then it just pulled back.
Yeah, markets don't do what you want them to do. It'll hit 100,000 when nobody's looking. That's when it'll do it.
Yeah. The other interesting thing, because it's interesting, you're right, it hit 99,588 on Binance, was, the way everyone says that all cryptos are kind of linked together, they're all correlated assets these days, which I don't particularly believe in. The interesting thing is, if you take a look at the Bitcoin chart right now, and it's going kind of like down and up and blah, 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 blah. If we compare that to what's happened with Ethereum in the last week or so, I thought it was really interesting that looks like quite a different chart. If I can go,
because money's coming out of Bitcoin in anticipation of an alt rally, and it's going into Ethereum.
Okay, so that would explain, because I noticed there was this distinctly different trend over the last few days. Started on the 26th, of where we've had this kind of like rally where it went from like just under 33 to 37. So that's a more than 10% in a day kind of thing. And it was interesting that was different, and now it's settled down. So yeah, you think then, Jason, everyone's stacking up on ETH so they can start buying into the altcoin market again?
Well, ETH is the proxy for alts in the EVM ecosystem. The way Solana is a proxy for everything that sits on top of Solana, which is pretty much nothing but meme coins these days.
Yeah. Which is why it was interesting what you were saying before about you considering Solana as a future mainnet platform.
Yeah, because they shove money into contracts as fast as they did on Ethereum 5 years ago.
Well, it's cheap to basically, you can't do memes on Ethereum because it's just too expensive, the trades, the gas fees. Whereas in Solana, it's just cheap. And Base, I think, is going to also come up simply because of that reason.
Yeah.
Yeah. So it'll be interesting to see what happens with the markets the next couple of weeks. And I think typically before Christmas, things tend to get a little bit quiet anyway. So
Yeah, no, October and November are the best months in financial markets, at least as far back as I can remember, which is, I don't know, since the early 90s that I can remember. And then everybody wants to do their deals. They want the deals out the door no later than the end of the first week of December. And then it quiets down. It doesn't resume until, if it picks back up, it doesn't usually resume until third week of January.
Well, that's the traditional kind of like Wall Street markets you're talking about there.
It is, but it you'll see it'll correlate with crypto markets because in 10 years there won't be any difference. Everything will be crypto. Anything that can be tokenized will be within the next 10 years.
Yep.
Well, I mean, we are, as the whole market's been doing pretty well because it's now what, 3.5 trillion. So that's gone up from the, I think we spoke about this a while back when it bottomed down on the bottom was 2022, 31st December. And that was like under a billion, it was like 800 and something, 800 and something million. And it's now 3.5 billion. So it's done quite a big big uptick in the last year and a bit.
Yep. There you go. That's the crypto market cap overall. And you're right, it's heading towards like the 3.6 trillion mark. The curious thing is I still find about this is, okay, so the total crypto market cap's around about 3.6 trillion. I can't remember what Apple's market cap is now. Or it might be something similar. It's what, sorry?
3 trillion, a little over. Apple is around 3 trillion. Microsoft is around 3 trillion. I remember when there wasn't a single company that had a $1 trillion market cap. I mean, I go back as far as $100 billion market cap was unheard of. But now,
we're running out of zeros.
We're not running out of zeros. We're running out of tolerance because the reason markets are so high is because you're measuring them against a rapidly depreciating asset, fiat currency. 80% of the rise in value of assets, it seems, is attributable to the monetary debasement, right? The effects of monetary debasement. The other 20% of the performance of equities is attributable to management's ability to outrun inflation on an after-tax basis from a return on equity perspective, combined with an expansion of multiples. Michael Saylor actually makes a really, really good case. Not all the time, but there was one bit where he explained that. And Listen, I've been measuring inflation since I'm 8 years old. I started with a gallon of milk when my grandmother would give me $1 to go to the deli to get a gallon of milk. I'd look across the street at the gas station, right? I'd tender $1, I'd get 30 cents back, and I see 59 cents for a gallon of gas. And I always wondered why a gallon of something that powers a machine is cheaper than a gallon of milk. And I remember when gas rose above the price of a gallon of milk during the late 70s, that it corrected. And every time it did that, it corrected. And then I started looking at how much everything weighs at supermarkets, the unit cost, right? I was 12 at that time. And I started really measuring inflation. And then when like, kind, and quality of durable goods began to upscale, like Jennifer convertibles became Pottery Barn. And you know what I mean? Like all these brands got upscaled. Now Jennifer convertibles is like a slum piece of garbage brand. There's inflation hidden in that. There's inflation hidden in volume deflation. So a pint, as you may know, is 16 ounces. But in the year 2000, a pint of Haagen-Dazs went from 16 ounces to 14 ounces.
It's a thing called shrinkflation, I think we call it here.
Okay.
Yep.
Yeah. Yep. So, there's a lot of inflation that's not measured, that's hidden within those techniques, right?
Yep.
If you look at the manufacturing cycle of cars, right? For instance, in America, if you use the Jeep Grand Cherokee, the Jeep Grand Cherokee went from a net weight of, I believe it was 2,800 pounds in 2011 to a net weight of 3,200 pounds this last model year, right? What'll happen again is that'll shrink again, but the price won't come down. You got raw materials that are excluded when you shrink a model, right? They go through this. It's quite fascinating for me anyway.
But again, it goes back to my retail experience of when I look on the shelf and I see the chocolate bar getting smaller in size.
Yeah.
Or the crisps or the potato chips or whatever that used to contain 50 grams, then 30 grams, then 25 grams. Absolutely. Yep. I think we'll see that. Interesting stuff. So unfortunately, or fortunately, we're on the hour. So I usually try and finish these off after an hour. And it's been a really interestingly different discussion as always. So Jason, thanks for joining today and sharing stuff about, as I'll call it, Pacchioli, because I can never...
Pacchioli. P-A-C-H. It's not how it's spelled, but that's how it's pronounced phonetically.
Yeah. So I can never say that right, but thanks for sharing the details of that and some great insights about the other areas as well. Ken, thanks for asking some really good questions on that as well. And Gabriella, you started the conversation as always with the discussion about regulation and crypto assets. Hopefully that's something for everyone to learn from. So going to close the call off now and say thank you everyone for coming along today. Have a great day.
You too, thanks.